Hey everyone, welcome back to Corporate Decoder. Today we're diving into a Form 8K filing, and let me tell you, it's like finding out your favorite coffee shop started accepting IOUs instead of cash. We'll break down what this means for investors. This document is an 8K filing, meaning Capstone Holding Corp is reporting a significant event to the Securities and Exchange Commission, or SEC. This event is important enough that it needs to be disclosed to investors quickly. The date of the event was June 26, 2025. The company making this filing is Capstone Holding Corp, a company incorporated in Delaware. They have common stock listed on the Nasdaq with the ticker symbol CAPS. Now, let's get to the juicy part, item 1.01, which is about entering into a material or significant agreement. Capstone had a previous agreement with an investor from May where they can sell up to $20 million worth of stock. This is called an equity line. It means the company can occasionally or from time to time ask the investor to buy more shares. The price is set at 97% of the volume weighted average price or VWAP for 3 days after the company sends a valid purchase notice. This is a discount because the investor is providing funding on demand. On June 26, the company made some changes called a First Amendment to this stock purchase plan. This amendment changes the maximum amount of stock or equity line securities that can be purchased in a single transaction. It removes the limit based on 100% of the 5-day average trading volume. It also increases the maximum dollar amount from $2 million to $3 million, also increases the maximum dollar amount from $2 million to $3 million. As revised, the maximum purchase is now the lesser of or the smaller of two calculations. The first possible limit is 40% of the trading volume of Capstone stock on the day the purchase is made. The second limit is $3 million divided by the volume weighted average price of the stock on the day before the purchase. If you want to read the full legal details of this agreement, you can find it as Exhibit 10.1 attached to this filing. Item 9.01 simply lists the exhibits included in the filing. One is the amendment we just talked about, and the other is the interactive data file. The exhibit list identifies 2MIM Stone Capital LLC as the other party to the amended common stock purchase agreement. The document ends with a signature from Matthew E. Lippman, the Chief Executive Officer. Now, what does all this mean? Capstone Holding Corp has essentially given themselves more flexibility to raise money by selling stock to this investor. The changes to the agreement lets them sell larger chunks of stock at once. This could be good, giving them quick access to cash, but it also could be seen as concerning because it might mean the company needs more cash. If the stock is issued, it will dilute the holdings of current investors. Each share will now own less of the company. Capstone is a small company and these types of funding arrangements aren't unusual for such firms. However, you have to wonder what the company needs the money for. Is it investing in growth or patching over holes in the balance sheet? Overall, these types of deals can go both ways. They can be very helpful for the company by quickly adding funds when projects come up on short notice. But some investors may see this as concerning. The need for ready cash can be seen by experienced investors as a bad thing. Alright, that was our breakdown of Capstone Holding Corp's 8K filing. What's your take on this amendment and what it might signify for Capstone's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. Make sure to subscribe for more easy to understand deep dives of SEC reports. Don't forget to check out the Discord in the description. Thanks for watching and see you next time.